First, I wonder if you can just sort of characterize how you think the renomination is being absorbed.
I mean, it seems like investors like it so far, right? We're seeing markets rally today. And I think this goes back to how resilient this market has been in recent weeks and even months.
There was a view out there that there was some kind of Brainerd put, that she'd be a higher hurdle politically. I wonder what you think that means and whether or not the vice chair thing is also worth considering vis-a-vis the markets.
Yeah, I mean, I had heard a little bit about that, but look, I think we're seeing, the tech sector continue to rally over the past month. The S&P 500 has hit more than 60 fresh highs, the most since 1995. So far, I think markets really like this decision, and it's kind of what a lot of people expected.
Gunjan, what do you make overall of what seems to me to be some mixed valuation signals coming out of the market? Over the last couple of weeks, we've had a number of analysts say that they were, adjusting their expectations, their ratings on stock just because they had risen so high. So you got that. Then I just mentioned a bunch of stocks, tech-related, but in different areas. C3AI, Chegg, Peloton, Zillow, Stitch Fix, all down more than 70% off their 52-week highs. And yet, NVIDIA, where growth has been strong, continues to soar. It must be well over an $800 billion market cap right now. What's happening from your perspective? How much of this is driven by options and speculation or interest rates or what?
It's so striking to me. I think there's a really, really big disconnect out there where, investors I speak to continue to cite inflation as a huge risk, right? That's been one of the biggest wild cards out there. But at the same time, you're seeing these growth stocks, tech stocks keep rallying. And there has been this divergence where you're seeing the Teslas of the world keep rallying. NVIDIA, Advanced Micro Devices, Qualcomm are sitting on double-digit gains over the past month. And as I reported recently for the Wall Street Journal, many people are expecting that to continue. So I think that shows you that despite these risks of higher yields and higher inflation that are out there, a lot of people are sanguine about the path for the growth sector and for the tech sector.
Are you hearing about seeing areas in the market that just haven't had the same kinds of extreme reactions and where investors might therefore look for either less volatility or maybe more behavior according to fundamentals from here?
I think this whole market has been so momentum driven. That's been a key theme throughout the year where when something takes off, it just really, really takes off. So it certainly seems like fundamentals have become a little bit less important than momentum trading this year.
Finally, a big journal piece on supply chain, sort of echoing what we've heard from others in the auto space and the chip space, with the caveat that maybe it's labor inflation that remains a little more persistent through the course of 2022. But I wonder if you can sort of put it into some framework. How good of news is this?
Sure. I mean, it does seem like some of these bottlenecks around the globe are starting to ease, right? And I think kind of putting that aside, even if they don't, what we've seen so far is that corporations have been able to pass down these higher prices to their consumers, whether it's Walmart or Home Depot. So investors seem to be looking past that for the time being.
Yeah, certainly in the retail front, it's been something that is less and less of a concern. Gunjan, thanks so much. Good to see you.
Thank you for having me.